Good evening, everyone. My name is Paul Young. I'm just going to walk you through Canada's trade stats for the month of November. So basically, if I take a holistic view of the exports, and I'm only going to really focus on the exports. Yes, the imports are important as well, but I want to really focus on the exports because this is the business Canadian corporations would be doing outside Canada, and exports are a key aspect of driving the economy when you look at GDP. If you take a holistic view of the gross domestic product in Canada, it's driven by consumer spending, government spending, and exports. So if you look at where we're probably going to end up this year, we're probably going to be ending up relatively flat in terms of our exports from the previous year. And a lot of that's to do with the huge drop in oil exports to the US, which basically has driven that. The other sectors in automotive, food processing haven't been able to absorb as much of the shock from the oil sector. But you'll see here that the big top three countries that we deal with are basically the UK, US, and China. Now, what I wanted to do is kind of give you an idea by sector. It's been a great year in areas like automotive, forestry products, ag. We've seen incredible growth in those areas. Forestry, because the U.S. housing market has rebounded. But if you get further down when you look at energy products, it's basically been a drag this year on exports. And we've all known that, and even during the election, it was mentioned that Canada's oil exports are down. Now, let's look at growth rates. So you're going to look at certain provinces that have seen different issues impact them. So if you look at Saskatchewan, Alberta, and Newfoundland, those are areas that are predominantly dominated by oil, so the energy sector has kind of hurt those provinces big time. But if you look at Ontario, it's seen a growth rate of 9%. That's all predominantly driven by automotive. So despite what Charles Sousa says, the fundamentals in Ontario are strong, they're not strong. Basically, the only thing that's keeping Ontario above ground is basically the automotive sector. And if you look at areas like Manitoba and you get into BC, you're seeing forestry products. Again, BC exports a ton of lumber, softwood lumber, to the housing market in the U.S. That's an issue that will probably come up as well because the softwood lumber deal is basically due to expire this year, and that's going to be some pressure on the Trudeau government in terms of how it's going to handle softwood lumber. So this kind of gives you an idea of the key sectors. Now what I wanted to do with this particular one is break it down, and I looked basically the average for 2015 and I compared it to the run rate for October to December. If you look at the key aspects here, energy products are down on average about 2.3 billion a month since our peak levels of last year. But look at what other sectors have done well. Motor vehicles, forestry, machinery, consumer goods, food, and aerospace have been able to offset a good 1.6 billion of that downturn in energy, but not enough to offset it. So why are people are saying to me, probably asking the question, is what's going on in those sectors? Well, if we were at the right cycle of the GDP growth, we should be seeing a lot more activity happen in key sectors. The biggest problem that you're seeing is in areas like Ontario, there's a capacity issue. Ontario's lost a lot of capacity that hasn't regained back. So if we looked at absolute dollar and probably we're back to the capacity we were in 2007, then our exports would probably be doing significantly higher. But that's not been the case, and that's another thing that Charles Sousa and Kathleen Wynne do not tell you, is that we've lost capacity and there hasn't been a big improvement in terms of investment or foreign direct investment. Yes, we've seen it, but it's smoke and mirrors because most of the foreign direct investment coming in is coming into clean technology. What I wanted to now show you is a global forecast here. Now, being a numbers person like I am, I'll be conservative and say on average that we may see 2.5% growth overall or 2.7% growth. That means our exports are likely going to increase by 14 billion. That's not a lot of money. That's what you're seeing on the right side. If I use 14 billion in new business and I use a net profit margin of say 10 or 12%, that gives me that basically before taxes that. So the maximum corporate taxes you're going to see based on the GDP growth based on exports is maybe $500 million and maybe another 2.5 million payroll taxes. That's a drop in the bucket. Considering the spending plan of the Liberal government, this is not going to be enough to offset their spending in infrastructure, other things in terms of the program spending that they're going to increase. So the economy is not growing that quick enough, and yet they're going to grow spendings a lot higher. The reason why I wanted to point that out, that's something you need to bear in mind. And you also need to understand is we're going to go through a period of slow economic growth. We will never see the economic growth that we saw in the 90s where we saw 4, 5, 6% growth per annum. We won't see that anymore because we've got a change and shift in demographics and the baby boomers aren't spending as much. However, we may see more uptick in exports due to things like the TPP and other trade deals that have been negotiated by the previous government. But it's really going to be incumbent on the Liberal government to make a decision what they're going to do. Thank you.